welcome to Align Trading. Today we're going to be going over how the 5 and 20 day along with the Bollinger Bands interact on the daily chart, giving you an understanding of the trend and what's going on, what to pay attention for, so you can then break it down on a smaller time frame intraday and profit off of these moves by having some understanding using just these simple indicators right here. So I'm going to show you what they mean. So our 5 day is going to be this purple one, and the red is going to be our 20 day. I'm going to go over some rules as well as put them up here on the screen so you can look at them, take a screenshot, whatever you need to do to help you remember. But these are going to help you understand the trend. So the first rule is going to be when the 5 day is above the 20 day, we are going to be in a bullish trend. There's no reason that you should be loading puts or anything long term whenever the 5 day is above the 20. Now, the next rule is going to be when the 5 day is crossed below the 20, which you can see right here, we're going to get some sort of downtrend, right? Every time it crosses below, downtrend, we cross above, uptrend, right? So if we're in a consistent state where the 5 is above the 20, then there's no reason to be loading long-term puts, right? As we are here, if you've been trying to call for the reversal here and just guess, you have not done very well. You have gotten squeezed out every single time. So this is why you pay attention to the daily chart and use this to get a better understanding. So the second part of this is going to be the Bollinger Bands. We're testing the top of the Bollinger Band and then testing the 5 day, and we continuously go up. This has been the whole way up, and you can even go back to some time like this, right? You see it. Same thing, testing the top of the Bollinger Band, top, 5 day, top. And now when the 5 day crosses below the 20, now you're looking for it to test the bottom Bollinger, which it often does, right? 5 crosses below the 20, test it. 5 crosses below the 20, test it. 5 crosses below the 20, test it. Same as when the 5 crosses above the 20, you're going to test the top of the Bollinger Band. Same principle, right? Crosses above, you get the touch right here. Crosses above, touch right here. And this is how it kind of tethers to each other and the equilibrium plays out. Now that you understand what the Bollinger Bands are and the moving averages, let me explain what basing is. So when we begin to base, this is when we are preparing for either a move up or down by using the moving averages. As you can see right here, we have touched it a bunch of times the whole way up, just continuously, and now we're starting to get some below. We touched the 20 day, we've retested the 5, and now what you want to see in a situation like this, if you're looking at it for the next day, is how do we interact with these moving averages the next day? And if we hold below the 5 day moving average, we want to see it test the 20 and then hold below the 20 and so on. This goes back as well. You can see we test the 20, we touch these a couple times, you get a big green candle. So if you were in puts, and just because we're below this moving average right here, both of these, the next day you have to pay attention, because when these are close like this, that's how they're set up to make a big move. When they get tight, you start to see move up. When they get together, you see another big move up. They start to come down, you get a move up. This is how they interact with each other. So as each day goes on, now pay attention to how these are interacting with each other, as well as if they are affecting the intraday move and how you notice it, and see if you can profit off this and use it to help your trading. Be sure to subscribe and have a good one.